Hey everyone, welcome back to my channel. Today I actually just want to do a super quick video on how I handle choppy markets and also go over how I traded SPY today. I actually didn't trade SPY, I trade micro ES, but it's the same price action as SPY, and for all intents and purposes you can actually trade them the same way. So I wanted to just touch on to help people out because I know today was a difficult day, especially starting out. If you were forcing trades, if you didn't recognize the immediate choppiness of the price action out of the gate, then there's a good chance that you lost money, and that's okay. It's just we need to learn from that when that happens. So I want to talk about how I go about avoiding losing money on days like today, and how patience is everything, and then also market net flow can give us a serious edge to ensure that doesn't happen. I want to show everyone a little trick that I use. So as you can see, this is the SPY chart today. I'm not going to do a bar by bar replay because, like I said, I want to keep this video quick. And when we opened up, now I watched the 3-minute chart, and when we open up right away, I didn't like what I was seeing. And one thing I should point out is that every morning before I trade SPY or QQQ, I go into TradeEdX, the options dashboard for SPY, and this is actually what the data looked like this morning for the gamma exposure. I haven't refreshed it yet because I wanted to save it for today. And if we look at this, gamma exposure oftentimes tells us where we're headed, where the prices that we're going to hedge around. And there's a lot of nuances to it, but I always make sure I check it. And interestingly enough, we could see a lot of positive gamma focused around 388 and 385. So right out of the gate, I'm sort of assuming that the 388 is going to be the target, and we're probably going to be pinned around that area throughout the whole day. And if we look at SPY, we can actually see that right around 388 is exactly where we were pinned, which I didn't like to see because it meant that we didn't have a lot of room to run. Also, if we look at the daily chart, one thing I want to point out, if we zoom out, you can see that this area that we're in, so basically 390 and above, we've been failing to go over 390 for quite a while. So when we opened the day already super close to 390, I was very concerned. I didn't like the look of it, and I knew to be cautious. I would have been very surprised if we moved higher. We're still certainly in a bear market. I know people have been optimistic because of these short-term rallies, but these short-term rallies are very common in a bear market. And until the market makers have, and big money, smart money has reasons to really push us higher, we're not going to really get far past 390. It's sort of a given. Maybe 390. 393 at the most, and a big reason for that is because of all the inflation concerns and everything going on with macroeconomic news. So I was very nervous going into the day about taking calls. Now there were some plays I did that I did have early calls for planned. I actually backed out of them, even despite that they would have worked out, but I didn't take them. But right away you could see when the day opened, we sort of get what I was expecting. And let me just zoom in here to make this easy to see. So we start with these big candles, these large wicks back and forth, and right out of the gate, it's telling me, okay, yeah, just as suspected, we're not going to really move much higher. And when I see wicks to both sides, and even though this is higher volume compared to most of the day, at least the first half of the day, it's still not the high volume that we're used to seeing at open, and it's just telling me right out of the gate, okay, big money isn't involved in this. They don't have a reason to be. There needs to be some sort of catalyst before we're going to be driven in a certain direction. And you can see whenever we go up, we come down and we get bought back up. And it's very easy to get caught up in this. And especially if you're using a tool like Market Net Flow and you're looking at it and you're telling you, okay, right away, put sell off. And that's probably a good indication that things are going to shift bullish. And I'm sure that was getting a lot of false signals. But the thing is, price action is still always going to be number one. Market net flow gives us a lot of insight into what's happening in the market, but we still have to pay attention to price action. That's the number one thing. And then just knowing that getting above 390 right now, it's going to be extremely difficult without some extremely good news. That I was being very cautious about buying calls. And so then as we start seeing these topside wicks form, I was like, okay, they're not going to let us go higher. That was a clear sign to me. And we could see, if you use volume profile, and you've seen my videos about volume profile, you know that I use these volume gaps or volume drops off as basically zones where I enter. And I could have entered puts here. I did not. But seeing this indication that we're getting pushed down was definitely a good sign that, okay, this would have been a decent put entry and would have caught some there. But again, all these bottom wicks these strong bottom wicks were enough to keep me out of it. And then on top of that with market net flow. Now, this is the default view of market net flow. And I just want to show you the completely different picture it gives you when you change one thing. So it used to be this feature was only in the Discord, but it's now on the website. Up here, if we go to expirations and we choose 7, we're seeing all options that expire within 7 days. And look at that picture. That's a huge shift of what we see when we look at all expirations. Now, I'm an intraday trader. I'm trading on the 3-minute chart, so I'm not as concerned with expirations that go out to 2024. You know, I care about what's happening over the course of the next 7 to 90 days, essentially. And when we look at these short-dated expirations, it changes the picture dramatically. And this right here, this choppiness was enough to tell me that, okay, I need to be staying out of calls, on top of what we talked about with gamma exposure and not being, and the price action not being able to get above 390. And sure enough, when we see this initial call drop off, this was around 10 a.m. So let's see here, right around 10 a.m. we see calls drop off and flow. We see us getting pushed down, and we see these long wicks rejecting to the top side. Again, this actually would have been a decent put entry. Now, you would have only captured about a point, right? So it still just seemed high risk to me. There was no catalyst out there indicating anything. And then as soon as it happened, we just chop around, it comes back up, and this is relatively flat. And I really don't like it when I compare it to higher time frames. So if I just turn off any filtering, and the higher time frame shows calls are in control, but then when I go to the shorter dated expirations, it shows puts being in control. That is a big indication that it's just top chop, especially when it aligns with the price action, which we're seeing here, and low volume. Volume is crucial for any sort of move to happen. And you can see, so down here, we started forming this volume gap, and as this price action played out and these wicks formed at the bottom, this gap became more apparent. So immediately that tells me, okay, we have our range. And I actually was considering playing the range, but it was also, I just didn't really see anything I liked. Now, all that changed, and I was keeping an eye on it, just the 7 short-dated expirations, because I actually choose to watch this as my primary view, and then I'll flip back and forth checking higher time frames as we go. Now, all that shifted right here. And when I saw this massive call drop off, so this was at 12:45, and let's look at the chart at 12:45. When I saw that drop off, I said, okay, and also on top of that, if you look at the price action, we're pushing in this zone, coming up, but we're not getting all the way to the top of this previous zone, because in my mind, I actually would have, if we would have came back up to this zone and rejected with these long wicks again, I probably would have entered puts, and that's sort of what I was waiting for. I didn't feel good about calls. Didn't really have too much of a problem with puts. I just wanted to get some sort of good entry for it. And we were just failing to move higher, and we couldn't, all the price action was happening all within this area here. And so when we saw that shift in market net flow, that really piqued my interest. And then at this point, it was all about finding where I could get a good entry at. Now, for me, I don't like just immediately, I don't ever recommend doing it no matter what tool you're using. I don't recommend, whether it's Bullseye, TradingView, market net flow, any tool you're using, don't just buy in puts because you see that. Right now we have to time our entry, and that's all about what technical analysis is for. And I use volume price analysis. I highly recommend checking out my series if you haven't already seen it. And we actually do get our perfect entry here. So at 12:45, we see that big shift, and then we start getting these big candles. And what was beautiful about this, which I really liked, is it started happening on increasing volume. So as these candles start falling through this level, we see volume going up. Now that doesn't tell me right away to take it, because this could very easily be stopping volume. If we look at the candles in these areas, you can see, for instance, on this green candle where we get pushed back up, we saw higher volume. And what that tells you is that as we get down here, buyers are now stepping in to push this thing higher. They didn't want it to go lower. Same thing with this candle. Buyers stepping in to push this thing higher. We can see it here again. Now this was right after this was 11:20 a.m. So naturally it's going to be lower volume, but still smaller candle. Buyers stepping in to push it higher. We could see it, a clear example of it here out of this zone, this volume gap zone, which I love using as entry zones, and I usually put my stop loss at the bottom of the zone. this actually would have been a decent call candle because we've already held this area multiple times, and then we see a very bullish candle and higher volume pushing us up. So you could have gotten away with calls here, absolutely. Now, when that happened, and then this would have been, because the volume gap right here, this would have been a natural take profit area. Now, when this happened and we started going through, I still wanted to be cautious because, for instance, this candle right here tells me that there's stopping volume. And so, but yet what happens is, despite all this stopping volume, when you look down here, we don't go much higher. We actually hold right here. And again, I could have taken puts and I didn't. And we started dropping down more, and I was like, okay, now I need to get in, right? Because we broke through this gap, and this is telling me that we're going to shift to trend day here. So what happens here, though, is we get this little spinning top or shooting star, whatever you want to call it. It's a little mini one on low volume, so it doesn't mean a whole heck of a lot. It certainly doesn't indicate reversal, but it does indicate a pivot, and we move higher. We have a bigger candle still on very low volume. Then we have another small candle on even lower volume. And the best part about this lines up with these lows right over to the left. So now at this point, let me just draw a line here to make that visible. At this point is where I entered in my puts, and I entered them in somewhere on this candle, I entered it in shorts because I was trading MES. But if trading SPY, this is where you'd enter in puts. Now, and then sure enough, we just proceeded to plummet. Now, here's what's beautiful about this move. We have this steep decline. At no point is there any reason to get out here. At no point are we seeing any sort of indication that we might go higher. We do see a little bit of buy up here. We give it another candle, and as this happens, I highly recommend gradually sliding your stops, and you can keep them. And you could see here, like, we have this volume gap. I always recommend, like, so as this forms and we're coming up here, this volume gap will form very quickly. And I always recommend keeping your sliding stop at the top of the gap. That way you don't get pushed out. Now, I know that you always run the risk of losing money, and that's why it's always nice to take multiple positions and scale out as you go, which is something I always do, but just trying to keep it simple and quick here. As we keep moving down, then we get more of a bearish indication. We keep looking at short-dated expirations. Everything looks good. And then what's really nice, too, eventually, is if we go back to showing all options across all expirations, we even get confirmation on the higher time frame. So as this move's happening, we get a cross on the higher time frame, which when that corresponds, that's like, if you're not already in, when those two things correlate, you need to get in, but that's also very good confirmation that you need to stay in. Now, again, when we move up on low volume, we keep dropping down, and then what actually ends up happening here is kind of nice, is we start forming points where we can connect trend lines. So you could see here, now it's not a perfect trend line, but what this essentially means is as you get these 2 points, you can draw this trend line down, and then when you start coming back up, right, and this is for runners, because truth be told, every time we start like getting a little bullishness, so I'll have anywhere from 5 to 10 micro contracts, and I'll drop some off, and then we'll come back down, and then I'll drop some off. And then what ends up happening here is you can either look at adding contracts, or say that if it breaks this trend line for any period of time in any significant way, and what I mean by significant way is I mean higher volume. I mean candles like this that we see finally at the end of the day, where we get higher volume, where we see stopping volume coming in. When I see candles like this low volume stuff happening, this is not stopping volume. And on top of that, when we do finally get above it on this candle, we're getting these top side wicks, and we're immediately rejecting. And just to show you, because at this point this volume gap has already formed, right, because all this price action has already happened. So we can even see, okay, despite briefly breaking that trend line, we have this whole gap. For me to think that we were going to get any sort of reversal, I would need to see it break through the top of this gap, and that never happened. We actually reject in that gap, and as I mentioned before, this would be a perfect place to even add positions onto. And yes, I know it's in a day, you can do that late in the day, but the indication of market net flow being so clear that we're now trending, and that puts are now continuing to rise while calls continuing to drop, and then also it really helps if you understand the catalyst. And I was looking around the catalyst when we go back to the 7-day expirations. And so I was wondering what the catalyst was that caused this huge shift where calls just rapidly closed out and put started increasing and the market started plummeting. And believe it or not, it comes down to news around Apple. Apple is a massive holding. If we look at the stock heat map, Apple is a big part of electronic technology on the S&P 500, so it's a big driver for SPY. And I think Apple and Microsoft are actually the top two. And so what that means is when you look at your top two names, and you see this happen on Apple, this massive sell-off, and there were people that use TradeEdX in Discord that did actually catch this. I wish I was one of them, but I was not. But we see it chop around, and then we see this massive sell-off. This was because Apple had very bad news they released about recession concerns and slowing down growth and things like that, and it just caused a massive sell-off. Pair that with what was already happening with Microsoft on the day, where we moved higher, where at which point you could have grabbed calls, and then we just proceeded to go into a straight downtrend. Those two things were big drivers of SPY just plummeting today. And so when you know your catalyst and you see that happening on market net flow and you see the underlying holdings just tanking, and then at this point it's just a matter of figuring out the best place to jump in a trend, and you can do that off of these pivots if you're late to it. As I mentioned, this was a key point to break through because it was a key support area the entire first half of the day, and so that was the point at which I got in. And thankfully this was a strong enough trend where there was never really a reason to get out. But the runners I essentially left open all the way until we saw this super high volume bull candle form. Then it's like, okay, and it's time to close up anyway. It's the end of the day. But so anyway, I hope that helps some people. And trading these choppy markets, it really comes down to patience and then finding significant changes and then using the short dated expirations and also comparing higher time frames to lower time frames. And we can't forget, we can actually see, using a lot of things like gamma exposure, gamma profile, all that stuff, we can actually see what the potential targets are now. This updates every day because this is based off of open interest. So if we refresh here, and actually I don't know why I just did that. Let me go back to SPY. If we go back here, we should see that gamma exposure profile changed. Oh, it actually didn't. Okay, well, I'll check this in the morning to see if this updated. But despite that, we should hopefully be able to gather some sort of target. And the fact is, though, I still don't think we've seen enough to get past 380. And this is also a big earnings week, which is going to cause a ton of volatility. So hopefully this was enough to kickstart us. I don't think we necessarily keep going down, but I can foresee a ton of volatility coming into the markets. And hopefully this helped you if you weren't sure how to trade today. I appreciate you watching.